Welcome back to the Eric Krown crypto channel, and this is being streamed exactly to Instagram right now. This is absolutely insane as we get the duel going on, and I wanted to speak about today on a macro Sunday, very, very long-term price action analysis. So as always, wish you a happy and healthy start to this day, and without further ado, let's just jump right into it right now. So let's start off with the monthly look for Bitcoin. And by the way, there will be no low-term timeframes things being spoke about on this particular video. The videos from the last couple of days are still very much relevant towards those topics, as you know, very little has actually changed. Anyways, starting off over here on the monthly, accumulation distribution is the name of the game as far as the long-term goes when talking about major highs, major lows, and major shifts in overall direction on this market. And what are we looking at within the context of this particular indicator? The accumulation distribution indicator is the slope changes in the extreme zones for the monthly. And basically, if you want to very quickly understand this indicator and the value of it, is that anytime that we do observe a slope change within the extremes, as you can see defined by these green not horizontal, but vertical bars right here, those have defined actually all of the macro reversals in direction for Bitcoin over the full history of it. Now, of course, it does not get the exact low or the exact high to the tick, but it does get the overall momentous shift, which in hindsight, if you are very long-term, I do think is incredibly valuable. As you can kind of see right here, these do get all of like the major pivots and more importantly, the momentous drive after that. So a more safe long-term direction, if you will. Anyways, the reason why I bring it up right here coming into October is that we just got a new tick on it, and the slope coming into October has actually declined, I would say, a good amount from September. So it is still downward sloped, which is giving us a bias that, hey, there is still risk to the downside overall, but ultimately we are seeing our first etchings of potential macro bottom starting to be put in here. But do not confuse that with calling a macro bottom as of right now. Until we actually do see an official slope change, I will not be talking about, calling macro bottoms. Just the probability of it actually happening is, well, historically not relevant, I would say. There is one thing though, is that whenever we have seen this green horizontal bar that my cursor is currently on right now tested on the accumulation distribution indicator, that is typically around the macro lows, if you will. And also if we were to draw a trend line right here, not sure how much I trust these, but you could kind of observe that there is some interesting action going on alongside that, but that is kind of lesser to the point. Anyways, alongside all of these green horizontal bars, you will notice, or actually I don't have it on the charts any longer, but I can assure you that this is essentially around where the lows are put in, to the tune of about 2 to 3 months. So does Bitcoin try for a low in the next 2 to 3 months? I would say, historically speaking, probably relevant. That does not mean it is exact for right now. But if I were to create a potential confluence to that case, I would bring you over here to this chart on the quarterly. So a few things of interest right here. The quarterly closed obviously at the end of September, coming into this next month of October. And the quarterly closed as basically an inverted hammer doji dildo right there, basically, which is a signal of indecision, perhaps reversal. Of course, when it comes to talking about reversal, there is absolutely none reversal talk confirmed until we at minimum trade back above the last quarterly high, which is 25,200 or so. If that were to happen though, it would set upon an avalanche of effects that would actually start to look pretty damn good for a nice extended rally deep into the $30,000 territory, probably somewhere between about 35 to maybe even low 40s in this case. So what essentially am I basing that off of? Well, if Bitcoin were to trade back above that last quarterly high, then we would confirm this as a local low. And because it is a higher low, there actually would be hidden bullish divergence between the 2015 lows, the 2018 lows, and the presumed lows right here. Again, all based off of confirmation back above that region, or just even a tick above, I should say. Again, the last quarterly high, which is 25,200 or so. It would also fulfill it already is fulfilling a trend line test right here, as you can see, coming off those last few lows. Again, that same sort of hidden bullish divergence, which actually did call the lows incredibly well back on over here in 2018, 2019. And then if we were to go to the weekly, to address the other trend lines that I was looking at. And I think a lot of people are aware of this one as well. And yeah, it is theoretically in there. The weekly RSI trend line, of which, are we still operating within this falling piece right here? Very likely, yes. Or it's not very likely, yes, like quite literally, yes, it is, But most importantly with this, a lot of the times what we'll see on a sort of formation like this is you get a double bottom first on the RSI before the actual breakout attempt, or an ever so slightly higher low. So what would that look like? like. Maybe it comes down here, tries for a bit of a higher low on the weekly RSI, thus confirming also regular bullish divergence. And then it does some busting action back on above this region right here, which is simultaneously the edge of the bearish control zone. That would also look pretty damn good for an extended bounce. But right now, again, that is still well and far away, and that would imply that, there is still risk to the downside in the more immediate term, which I do think is actually rather likely. But ultimately, long term, I do trust formations like this, like a falling pizza or falling wedge, whatever the fuck you want to call it. Falling fuck is what I like to call it, because most of the time they don't work out on price action, but they actually are pretty damn good on the RSI oscillator. So this one, likely going to take its time, of course, if it's going to play at all. But again, confirmation would be back above the bearish control zone. So I'd like the confluence right there, basically above that 40 read essentially. So moving on to the next thing, I wanted to now address the monthly stochastic oscillator because there are a few things of interest right here. Ah, bastard, I'm on the wrong chart. Let me get to the right chart. Yes, there it is. So the monthly stochastic oscillator for Bitcoin has actually also been pretty damn interesting in calling some macro lows. Anytime that we have seen a monthly stochastic cross, especially below the critical zone on the bearish side, so that's below the 20 reads right here, those have actually correlated with all the macro lows in Bitcoin's history. Again, here, and those are the three ones. You'll notice that I have two other pieces also marked off. These were upside crosses that happened below the 50 read. So these were like mid cycle rallies essentially. So what are we looking at over here? This was the 2013 double bubble, and this was right off the Rono dump over here before Bitcoin went from like 9,000 to 65,000 or 69,000. So not bad, of course. Anyways, in this case, you can see that the monthly stochastic oscillator is within that critical region, of course. So it's within that same area. Would also even be playing out a potential trend line test like this on this month, but because we do have the advanced stochastic here, we can actually forecast the exact price that would be needed in order for it to cross the upside, thus likely confirming that as a local low, and that'd be 26,400. So any sort of a closure above there, obviously monthly stochastic starts to turn up. Obviously the quarterly that we observed over here would be trading above the prior quarterly high. So that would confirm this as a local low and have targets higher as well. We could probably be looking for at minimum a really impressive bounce into the deep $30,000 territories coming into end of year if that were to happen. This is a big if though, of course. Again, these are contingent upon things that have not fucking happened at all whatsoever just yet. And what we're going to look at soon enough is maybe not as nice, at least for right now. But I did think that was rather interesting. And then if I do want to bring it back into the statistically based analysis, let me come on over here. And did I want to do this on the daily? Well, yes. Okay. So first things first, I wanted to follow up on the daily CME signal. We have yet to see it confirmed just yet. We need to see the daily BBWP go into full on expansion territory above the 10 percentile marker right here. But essentially, what is this signal? I should probably explain first and foremost. It is a volatility, which is represented by this indicator BBWP versus stochastic momentum signature. Volatility, anytime that it has based off at extreme lows, which are defined as below 10 percentile or more over the full history of CME, the expansion phases from these extreme lows has led to an average move of about 24.25% over the course of an average of about 2.5 weeks. And the stochastic also has been correct in getting the volatility expansion 83.33% of the time. In this case, we are setting up for yet another one of these signals, very likely this coming week, because there is also a nice economic catalyst. There is the CPI data coming out, I believe, on the 13th. So that's is that Tuesday? Is that like Tuesday? Let me just double check here. That's Thursday. I don't know how my internal clock is so terrible right now. Anyways, maybe it's always been that bad. Anyways, I suspect that we very likely will get that signal fired off this coming week. And here's the thing. While Bitcoin did have that nice move up towards about 20,500 this past week, we did not see the actual signal confirmed in and of itself. And during that whole time, the daily stochastic oscillator for Bitcoin on CME was moving all the way up here, but not really doing anything specific on price action that mattered for high-term time frame explosive continuation. So that is naturally going to be a bearish reset assuming that Bitcoin doesn't recover these levels. Now, of course, Bitcoin did close above the stochastic momentum pivot on Friday at 18,750, but that number is going to massively change when it opens up tonight, coming into Sunday, Monday, essentially. And I imagine that number is going to be somewhere around where spot price action is. So what we can do is we can then go over here to spot price action, look at where the momentum pivot is, and you can see that Bitcoin spot just closed below it yesterday for the first time in a while, and the pivot is 20,200 basically. So as long as Bitcoin's below there, we probably will see this turn down, and then just as before, we will be able to apply these stats to the downside. As they're just going to be more relevant. Again, the stochastic direction has been, correcting, getting the overall direction 83.33% of the time based off of that signature. So that would mean that risk is once again to the downside. And if we were to look at a first standard deviation of where we kind of expect those results to fall between, I'd be looking at a range and essentially areas of interest between about 15% all the way up to 33 and a third percent. So that would essentially put Bitcoin back down around at the range lows, maybe even set it up for an actual breakdown. Although I do still hold my reservations with that. I do feel like Bitcoin's kind of had its, many chances to break down already. It's kind of like running out of chances, in my opinion. It doesn't mean that it can't come down later, more harshly, but of course, this is all contingent upon, this next week of price action, I suspect. So ultimately, that's what I'll be watching in the more short term. This is the lowest time frame that we'll address on this particular video. And then what I'd like to get into now is I'd like to get into Dixie. So Dixie, the dollar index, as always, it's not a direct correlation to risk on assets. It's a direct correlation to, of course, a basket of other fiat currencies, but it does typically play that way, especially on the macro trends. And when I look at the quarterly right here, there's nothing at all whatsoever fucking bearish about this chart. Now, when we go into slightly lower term timeframes relative to this, could very easily play out a pullback, but keep in mind that coming into the end of the year here, that would imply price. I do think within the next 6 to 12 month period, you're extremely likely to see it somewhere around 120, maybe even higher than that. If things get really crazy at around like 130, again, that's going to obviously take time. We're on a quarterly chart right here. So each and every one of these dildos represents 3 months of price action, but that would give me a long-term bullish bias on this, which probably does play opposite of risk on assets. If we go down to the weekly, there was also potential for a local high to be confirmed this past week. Did not happen as Dixie did close above the last week's low, which was 111.5. It actually closed more than $1 above it. So no high is going to be called here as of right now. It obviously does offer up the potential for, a similar sort of call coming into this next week, but it's actually a little bit more simple here. But trading anywhere below the past week's low, which is 110 in 5 cents or so, 5.5 cents, then yes, I would confirm this is a local high, thus confirming this as 1, 2, 3 drives of bearish divergence, thus confirming, very likely a move back down south of 110 to 107.5, probably even lower than that over time as well, towards 104.5 to 105 region. Anyway, and that probably does benefit risk on assets in that case. But for right now, this is still continuation, even though it looks absolutely fucking crazy. We also do observe almost 2 full extremes on weekly BBWP, which is usually a sign of short-term reversal as well. So again, you're not really hearing me feel too confident in calling continuation of the upside off this one. I think that's probably going to spend some time, grinding up around this current region, and then probably come down and then set up for an upside move, later on, maybe coming into end of this year, maybe coming into the beginning of 2023, something like that. So it does still kind of make sense to me that we could see an end of year rally here. But it's really contingent upon a lot of the areas, a lot of the things that we spoke about earlier. Okay, what else? All right, so now that we've covered that, let's now talk about traditional markets, because we do expect these to more or less kind of play, more or less with each other. More or less with themselves, or, we all do that. Anyways, looking at the weekly right here for NASDAQ, it did close as, again, a bit of an inverted, what do you want to call this? An inverted hammer, inverted doji dildo, inverted dragonfly, whatever the fuck you want to call it. Again, a signal of a potentially indecision and perhaps reverse. It is a signal of indecision, but perhaps reversal as well. How would you confirm this as a reversal and a local low? Just needs to trade above last week's high, which was 11,729. Anywhere above that, that confirms this as a local low, thus confirming this as 1, 2, 3 drives of bullish evidence come off the low. That would be a lot easier call than Bitcoin, by the way, as well for myself. And I would be looking for big girthy green dildos back up towards 12,500 bucks, maybe even more over time as well. But again, long term, like, is this super strong price action? No, not really. So the real question to me is, are we about to see a nice bear market rally, like a real intense bear market rally before further continuation to the downside or not? I'm really split on this right here. The areas for calling continuation are pretty fucking clear, but at the same time, until we actually hit one of those major areas, it's just, we can look at our little indicators and whatnot to get an idea, to get a hint. But at the end of the day, price action is going to matter most when calling this sort of a move. So it is going to require a lot of patience, which is what makes trading fucking fun now, doesn't it? We can also look at the NY, which is the New York Composite. I quite like this one as well. And same sort of thing here, but a little bit weaker. So I would have a little bit more of a natural bearish bias on this, but it's the same thing on the weekly as well. It's like, yeah, do you have potential regular bullish evidence in there? Yes. If you trade back above last week's high, that would confirm it. And, we'd probably play out another decent bear market rally at the very minimum. So other than that, I do want to swing back around to this chart for Bitcoin. And just talk about validations and invalidations for greater upside move. Well, we kind of already talked about the upside move for Bitcoin. Of course, in the more short term, if you do see any sort of price action, preferably want to see this on closures, really, because otherwise, things do have lower probability. But anything above last week's high, which is about 20,500, I really would be looking for another move back up at minimum to 21,500 bucks, probably more like $22,000. And at that point, probably have to just be looking for general continuation, as we spoke about earlier. By the same token, to the downside, calling a downside breakdown is the same as before. I need to see a higher time frame closure below about 18,100 below there, and then yes, I do believe that you're going to see all these stats apply to the downside. We're probably looking at price action down to 15,000, 16,000 bucks in the next month or two, and then come back to it after that. So everything's kind of set up in that regard. And I suppose we'll probably have we'll probably have an actual direction coming after the CPI print on Thursday, I suspect. I think that everyone's kind of waiting around for that. It's been really interesting these last few months, like this last year. Everyone's become a macro expert. Look, I'm not a fucking macro expert. At the end of the day, there's much better people to listen to than me regarding that. There's TED Talks Macro on Twitter. He's great. There's Darius Dale from 42 Macro. He's great. There's Elio Trades even. He's actually making a name for himself in the macro space as well. Like, he's definitely done his studies and he knows his shit. But that's not me. So at the end of the day, those are the guys who go to for that. And then it's kind of just combining the technical pieces with it to kind of come up with, areas of interest, pivots, and of course, targets based upon that. Other than that, I think that's a good place for me to be leaving off on this video. I want to be taking a second to wish you the best as always. Take care, much love, and see you hopefully soon.